CBDC will arrive, and it will also be the subject of the currency reset at the same time. At some point, the world is going to go into a crisis, or a country is going to go into a crisis. It might be the UK, it might be Italy, might even be the United States, but something is going to happen. Things are very, very taut in the financial world at the moment. When that happens, I think they will close the banks. You'll wake up on a Sunday afternoon or Sunday morning and hear the news that they've shut the banks, they're not going to open on Monday. And then by Monday evening or Tuesday, you'll get the announcement that we're having a new currency, the CBDC, and don't worry, it'll be 1-to-1 against the old currency. But there'll be some restrictions on your ability to convert your old money into the new money. So if you're poor and you have a small bank account, it'll be converted 1-to-1 straight away, and you'll probably even find that you get a free gift from the government to kickstart the system. Maybe £3,000 or £5,000 will be given to every citizen gratuitously to kickstart the system in the new CBDC. But if you have 100,000 or 1 million in the bank, you're going to be told, yes, it's 1-to-1, but you're going to have to wait to convert it to the new currency. Now, wait means never. We all know that, but they won't tell you that. They'll say it's a temporary suspension because we're in the middle of a crisis. The people are rioting in the streets. We need to calm the system. So here's some free money, everybody. Go and enjoy yourselves. And by the way, the rich can't convert their money for a while, but they'll be able to do so later. So if you happen to own Apple bonds, they'll be denominated in the old dollars. You won't be able to. It'll still be old dollars. You won't be able to convert those old dollars until you've got the cash. But when you get the cash, you'll need permission to do it. And you're not going to get that permission. It'll be exactly like we had in Britain back before 1975, when we had the exchange controls. You needed permission from the Bank of England. I mean, I remember when I traveled abroad the first time, I was allowed to take £50 with me abroad. Didn't go very far. The CBDC will arise as a consequence of a crisis. And when that happens, there will be a limitation on how much of your old currency you can convert at 1-to-1 with the new one, even though technically it'll be 1-to-1, so you've lost nothing. But the advantage of this, from the government's point of view, is it's to all intents and purposes wiping the slate clean, because all of their liabilities will be denominated in a currency that nobody can use, nobody can spend. So if the crisis is generated by people rushing to try and convert their money into something, into anything, firewood or whatever they're trying to do, they won't be able to use their old currency unless the poor man will be able to use it. But anybody with any wealth, like the government of China, will be stuck. So the government will be able to print away its old liabilities without any worries at all, because nobody will be able to suspend it and it won't be able to affect the economy. The only thing which can affect the economy is the new CBDC, which will be, at least initially, touted as very sound money, at least until they start borrowing in the new currency. But then they've got a fairly long lease of life, because they'll be starting from a debt to GDP ratio of effectively zero, because they won't need to count the old debt. Of course they will, from an accounting point of view. The stock market might shut down for a week while the banks are closed, but there's no reason, if you own shares in a blue chip company, there's no reason why you won't continue to own them. And likewise, if you own a government bond, you'll continue to own the government bond. The difference is the company will still be worth something. The government bond, you won't be able to do anything with it. If you sell it, you're going to get some old currency that you can't and not allowed to convert to the new one. So to all intents and purposes, the old bond will be worthless. And I think when they bring this rule in, when they bring in the CBDC in the middle of a crisis and freeze your old currency, you'll still be able to trade your old currency, but you'll be trading it effectively through the back door, and you'll be lucky to get 70 cents on the dollar on day one, and 3 months later, 20 cents on the dollar, and a year later, nothing. Well, we don't know how it's going to play out, but I'd like to think that if you own a house or equities or gold and you sell it, you'll be able to sell it for CBDCs. I think the problem that the government will be facing is when we panic about the currency and we want to own anything but the old currency. I don't think they have a particular problem if you're selling something to have more of the new currency, because that makes the new currency strong. What they'll be trying to avoid is a complete collapse of the old currency by people getting rid of the dollar or the pound or the euro or whatever's falling in price. I think this would be great for the man in the street who has a mortgage, because his mortgage will be denominated in a currency that nobody can spend, and therefore it will be worth a lot less. So servicing his mortgage, he'll be able to buy the old currency at a few cents on the dollar, and he'll have a lot more money in his pocket to spend on other things. So in that respect, it'll be great for the economy because the man in the street will have less outgoings. His mortgage will be effectively over a short period of time wiped out to nothing. So will his old credit card debt. And the same thing can apply to corporations. Almost all large corporations have got large borrowings, which in a currency reset will continue to be denominated in the old currency. And over time, they'll be writing down the value of those liabilities and booking a profit as they write it down as a foreign exchange profit. So it'll be very good for companies who'll be writing down their debt. It'll be very good for the government, who will no longer see their national debt as a problem for the economy. It'll be very good for the man in the street who'll have no mortgage, which is now denominated in a currency which doesn't exist, and his credit card is wiped out, so he'll be able to start spending again. The government won't need to take money out of your pay packet to service a national debt, which it doesn't care about anymore. So I think actually once we pass the reset, it'll be very good for the global economy, and we could see an economic boom, the likes of which we saw back in the 1950s when America was pumping money into the whole world. Asset holder has CBDCs, which he can spend, and we mustn't forget that the crisis will be arising because people are panicking about the currency. They're trying to get rid of the old currency. If you convert all the old currency, and therefore all the old bonds and all liabilities and assets into the new currency, you're just converting old pounds for new pounds, and it's the same thing. So I believe that monetary assets, fiat-denominated assets, will, to a large extent, remain in the old currency and not be converted. But they don't want a riot on their hands, so of course they're going to convert everything that the small guy owns, and the small guy will be okay, but the government's going to decide who wins and who loses, and I guess it's not going to be the wealthy, and I guess it's not going to be the foreign governments, and I guess it's not going to be the foreigners. I think 5 minutes to midnight is very telling, because I think that's where the world's financial system is. It's as near as it can possibly be to the end of the current state, and it's time for a reset. All the big institutions like the World Bank and the IMF are talking about debt forgiveness. Well, debt forgiveness, it's basically means don't pay, or debt restructuring, don't pay. So I think that's where we are, and I think 2024, 2023 will be years where this is quite likely to happen. I don't know which year, but I think it's very, very close. My advice is, from the wealth management point of view, stay diversified, but minimize your exposure to bonds, minimize your exposure to fiat, and increase your exposure to other things. And obviously gold and silver would feature in those other things. And I'm not going to say a figure or percentage of what's right for each individual. But I think there's one important thing I'd like to add, because at some point people are going to say I'm wrong. And the reason they're going to say I'm wrong is when we get to this currency reset, we mustn't forget that half the wealth on the planet will not be deployable. We're talking about the cash deposits, the bonds. It'll be worthless. When that happens, people will be forced to rebalance their portfolios. They'll be selling assets to get the new CBDC. That does mean that in the new currency, the price of everything will be lower than it is today. I've been preaching for several decades, I would say, that it's not the price of goods which are going up, it's the value of money which is going down. Obviously, things have accelerated a lot in the last few years, and we're in a much more serious situation than inflation. Inflation is not the big problem at the moment. The big problem is the potential waking up one morning and finding that your money's worthless. But perhaps I just go back and tell a little story. If I recollect that I must have been about 5 years old, and I was at my grandfather's house, and he put in front of me a bar of chocolate and a £1 note. Now, back then, a bar of chocolate was worth sixpence, and a pound note was worth 40 sixpences. So there were 240 pennies in a pound back then, before they decided there was only 100 of them. Anyway, so I took the bar of chocolate, and my grandfather and all his friends laughed at me because I should have taken the pound note. Now, I don't think you can buy a bar of chocolate for £1, but back then you could have bought 40 bars of chocolate. A few years later, when I'd wised up a bit about money, I may have been 10, he put in front of me the bar of chocolate, the pound note, and a gold sovereign. And I took the pound note, being a wise kid, and I could buy more chocolate. Now, It was quite strange because he laughed. My grandfather worked for HMRC, so he knew a thing or two about money and taxes and investments. But I don't think any of his friends knew what a gold sovereign was. And I don't know what it was worth back then. Perhaps it was worth £3 or something. So then I remember my father giving everybody a long lecture about, I guess it was about Gresham's law, explaining the sound money drives out the good, the bad money drives out the sound money, which gets pocketed away. Anyway, it seemed like none of his friends actually got it, and I certainly didn't get it at the age of 10. But when I was maybe 15 years old or 14 years old before he died, he gave me this gold sovereign. And I went along, when I started work in 1975, I went along to shops, Pixley in London, to ask them how much it was worth. And I don't remember the exact price, but I seem to recollect them saying, we'll give you £10 for it, or you can buy another one for £25 or something like that. And I didn't like what they were offering. But I think that today a sovereign is probably worth several £100s, but I still have that gold sovereign that my grandfather gave me. It's not worth any more or any less than it was in 1962. It won't buy me more bars of chocolate or less bars of chocolate than it did then, but the money has gone down in value. So it's the money which has gone down, and that's what we have to remember over the last, ever since money was created, it's been going down. It's not like that the UK government was the first government to decide to debase the currency. Every kingdom ever existed debased the currency at some point.